Thank you for watching Resource Talks. My name is Antonio, and this is actually the second episode from the floor of the PDAC. The first one was focused on geology. I actually thought that was the better one, so please go ahead and watch that. I also thought it was a better one because it kind of got spicy at a certain point, and spicy makes sense. I mean, mining conferences are always full of bold claims, as we all know. As we all know, it is always district scale. It's always bonanza grade. It's always strategically backed. It's underexplored. Elephant countries. I can keep coming up with catchphrases. I've heard plenty of them over the last 4 days. But behind every junior mining story, there's also a normal business to run. I mean, there's financings that have to happen. There has to be a marketing strategy. You have to be able to get your drilling in place and everything behind it. There are things that could really make or break a company if it's not the right people running it, no matter how good the rocks are. And I've been told there's over 3,000 companies listed across the exchanges. So my question is, how do I quickly go through them? How do I quickly discard? You can see I'm not even able to speak after 4 days, but how do I quickly discard the obviously bad opportunities with just a couple of questions? Luckily for you, I'm not going to be the one coming up with the questions. I went and spoke to the people who actually know what they're doing, and I asked them, if you could only ask these issuers one question, what would that question be?
The skin in the game question. How much of your own money do you have in this? Money in whether it's options or shares that doesn't vest or doesn't come into the money until share prices go up. In other words, are your interests aligned with shareholders? That would be if I could only ask one, that's what I'd want to know.
What do you really want to hear? Like, do you want to hear that they've bought shares in the market at a price that's higher than the current market price? What are you really looking for?
Well, I'm looking for the incentive. How it got there isn't that important. Obviously, it would not be so great if they got a bunch of free shares or 0.0001 penny shares, as a freebie for coming on board. That doesn't help me any. They can make money at any price. But if they've actually bought in the open market, that's great. Or if they're, young guys starting out with sweat equity, but the share price needs to go up for them to vest, that's okay too. I want to know that they're working hard on behalf of shareholders, and they don't just get to walk away with a big paycheck no matter how or what they deliver for shareholders.
What would be a big red flag here? Is it just the founder shares, or is there something else that I might be missing?
Founder shares, if they only have those founder shares, that would be a red flag. But you've got to pay Babe Ruth if you want an ace hitter on your team. So I'm not completely opposed to them. So I would want to look for additional skin in the game, like actual exposure. And if they haven't stepped up to the plate for that, that would be a red flag. Of course, then you can also look for insider selling too. That's on the flip side. Are they selling? That would be good to know.
Well, you're talking to an issuer. If you could only ask them one question, what would that question be?
Well, Elon would say, what did you get done last week? But I would say, what dollar value of shares did you buy in the last 2 years?
What are you looking for as an answer? What's a lot, what's not a lot?
Well, of course, it's not a realistic situation just to ask one question, but I was thinking about it a little bit, and you cannot answer. You have to ask many questions to find out if a company is good or bad. But if there's just one question, then it tells you a lot if somebody did buy a serious amount of money in the stock. And if they didn't, it's not a complete red flag or game changer, but I prefer to see the people to buy some stock themselves, because why would I buy it if the company is not buying some stock themselves? If it's really cheap, and they often say they are undervalued, why not buy it?
I bought some poutine for lunch, and that was a high dollar amount to me. But then there's some people right around the corner here buying Rolexes, and maybe that's cheaper for them than poutine is to me. So how do I know if the money that they put in the company is serious to them?
Well, in most cases you can make a bit of a guesstimate. Of course, you don't have to ask this question to the Lundins. If they come in in a big way. Yeah. If you have a younger person who is just 10 years out of university, I'm not expecting him to have $10 million, So if I looked at the salary, and salaries in the junior mining business are pretty good, typically. $200,000 is not an odd number you see quite often. So if they make $200,000 a year, and they're not spending $5,000 a year or $10,000 a year of buying their own stock, or maybe $15,000, $20,000, then, especially at the low points, if a company is going through a rough time, then a signal, buying some stock is a signal like, hey, this is a good point. I really think that if there's just one question, I would rather be with the person who actually buys stock. Yeah. And there's no guarantee either that it's going to work, but it's at least you have somebody who's committed. And of course, the more the better, but you have to make a bit of an estimation. Is this person very wealthy? And I don't mind. I mean, even if the person is fairly wealthy and only buys $30,000 a year in different moments, at least they are buying stock in the market.
Yeah.
Yeah. And I want to see some sort of confirmation that they also like it.
So a red flag for you then would be just no insider buying for multiple years, or what would be a red flag in this situation?
Red flag, I actually have a couple of companies that I actually like a lot, where I like the people as well, and I don't want to really, in most cases I'm not going to ask them why are you not buying it, but so I do know companies that are not buying, they have a lot of stock, most of it is a bit cheaper, they have a lot of, but if you have options or you have cheap stock, you don't have the downside, you do have the upside. So they have reasons to work hard to make it work, but they also have reasons to take risks, and maybe risks that I don't want them to take, but they take it because they have cheap stock anyways. So preferably they also have some stock in the market. And sometimes it's almost like marketing. If they get 5 million shares in the initial round for almost nothing, and then when the IPO comes in, they buy a little bit, like 2,000 here, 3,000 there. I can discriminate between real marketing insider buying and insider buying that's really because they really believe the company is cheap. And of course, if you get to know the person, you can you learn a little bit how they think, why they would do it, and if it's a super promotional person, there's a bit of a risk that he would spend just a bit of insider buying to promote, and which is okay. But I prefer people to be really convinced that they are undervalued and they show it in the market.
One last thing, what's one company I should go and talk to and think about it, because you only get one? I didn't tell you I'm going to ask you
no,
this.
I know. Sunpeak Metals.
All right, I'll be there. If you're talking to an issuer here at the PDAC and you can only ask them one question, what are you asking them?
I would say, when is your share price going to double? Why and when? So is that 3 questions?
Yeah, sure. That's exactly what everyone wants to know, essentially.
Yeah.
What is it that you're looking for, though? I mean, that's almost an impossible question to answer.
They should know. They should know, because that should be their goal. When I recommend a company in my newsletter, my stated goal is I would like that to have the potential, very realistically, to double within a year. So if you're not at that stage, talk to me when you are. If you're at that stage, you have to prove to me why you're there, and then it gets into everything else. What's the catalyst that's going to happen? What target are you aiming for, and why do you think you're going to reach it? Now, beyond that, you have to go through everything else. You have to go to the share structure, cash in the bank, who's behind it, everything. What's the target size, management.
Yep.
Everything has to be factored in. It's a recipe, but it's like a gumbo. It's a very complicated melange of so many different factors. A lot of companies will be weak in one aspect and strong in another. What tends to override everything, well, 2 things, management and the size of the prize. But you can have great management that just isn't working in the right place at the right time. And you can have a great project that has not so good a management behind it that can actually destroy the value of a project. So it all has to come together.
What would be a red flag in an answer to that question? Because I can kick it off with, it's kind of funny too, like, when's your share price going to double? What would be a red flag as an answer?
A red flag is that there's no sense of urgency to me. If a management team is looking at ways to get their salary paid for another couple of years, if they're not going for projects or prospects that have a potential of really moving the needle for their company or other companies that may acquire them. This is a business, as you see around us, this is a business of dreamers, of prospectors, people who are looking for riches and trying to find the big prize. So you don't want a management group that just wants to have an expense account, have their salaries paid, do any deal no matter what, dilute their share structure just to keep money in the bank so that they can keep their office, keep their expense account, keep their salaries. You see that actually a lot in this business. There has to be a sense of urgency, and there has to be a sense that they're working towards something that is just beyond them, but they know that they have a good chance they're going to get there. And it's also good if they don't get that there's a backup.
I'm going to put you on the spot here a little bit. What's one company I should definitely go and talk to here at the PDAC?
Well, that's like asking what's your favorite child, isn't it? I would say at PDAC, I'm trying to think of who may be exhibiting. We were just talking, and Rob Bergman of Relevant Gold came up. That's one of my favorite stories. I own it. It's in our portfolio. It has the potential to basically duplicate the Abitibi greenstone belt in the U.S. They have a tremendous land position. Essentially, everyone who is really technically oriented, very well-versed geologically, that has ever looked at that story, to my mind, has ended up buying it. So that's what you would call a smart money play in this business, I think, in this sector right now.
If you could go to these companies and only ask them one question, if you wanted to know whether they're BS or not, what would you ask them?
I think looking at how I've made money over the last year, 2024 was a tough year. I wouldn't say we're in that full bull market. I would want to look and ask about catalysts and how that might separate the company from the other stories that are out there right now. Finding those X factors, I think, could be the reason why you make money and don't make money. The generic, we have this, or we have drill results coming out, that always comes with the same sort of coin flip of risk. But if you can find a point that's a catalyst that maybe the market doesn't really recognize, or something about the story that's a little bit different, maybe that can be the reason why you make money, even in a down market.
Can we be more specific? Like, what's an answer that you're really looking for?
Sure, Orion Resources. Right now, I think a lot of people look at that as an exploration project. They've heard, the great story of probably 2 or 3 years, 4 years ago, when the share price really sprung on these boulders at Amarusco and the original discovery, and the share price has kind of precipitated down. Last year, it was trading for, I think, around 45 cents. And Rupert, on the other side, who coincides or has a coincident project in Ickery, a world-class project from my book, has their discovery right on the border of Helmy, which is a JV held between them and B2 Gold. I looked at that and I thought, the market's giving no credit to this world-class deposit right on the border, and I think that they're going to have to acquire Helmy to make this work. It was actually at PDAC last year. I used it in a presentation. I said, hey, look, I'm buying a lot of Orion. I more than doubled my position size because I don't think the market's, or they're at least discounting this, not paying any attention to it. The week after, and of course I had no idea, Rupert comes out, does a deal with B2 Gold. Orion's share price rightly goes soaring. Today we sit almost double where it was last year. Ickery's now got a PFS on it. I think the PFS is almost better proof that I was correct in my assumption that they're going to have to do a deal here. And I think that is an example of something that stands out, that's not just your typical drill result, but can make you money even in a down market.
So if I go to one of these companies and ask them, what's the catalyst? And they go like, we're going to create shareholder value. That doesn't cut it for you?
No, that's what the most generic. That's almost what I would expect. And a lot of this stuff, when I say catalysts, you still have to listen to the story and listen to what they have coming ahead, but it's going to require your brain to work, and you're going to have to think about how this stuff ties together. And you look at the valuation and you say, okay, well, why should the share price go up? What isn't the market seeing, or why are they already discounting it? And is this a reason, even if the gold price or the nickel price doesn't go up, why would they give value to it? And so in that instance, you can see, it doesn't really matter that gold went up to 3,000. It helps. But you can still get share price appreciation because there's something underlyingly tied to the value creation that's going to happen, and it's not that typical thing.
So maybe I should ask them, why should your share price go up? Like, what's the thing that it's going to make your share price go up instead of create shareholder value?
Right, and it's still going to come up to that investor's ability to decipher what exactly they're telling you. Because, again, I would say 90% of the companies you talk to, it's going to be generic. Yeah. It's going to be, we're doing this, we're doing that, and it's that simplicity in it, right? And really, I think for most of these companies' share prices to go up, you need the metal price to go up. Yeah. So again, it's the nuanced approach. It's sometimes, I would say in my experience, it's probably the promoter or the CEO that you're talking to doesn't maybe not even realize themselves what might be that catalyst to move things forward. Or maybe in the case of the guys that I've invested in, sometimes they're a little bit sheepish to maybe stretch out that much. But you kind of put that together, and it doesn't mean it happens 1, 2, 3 months, but maybe it's a year ahead of time. But still, you want to buy stuff when it's cheap, and conversely sell it when it's moving up.
What's the biggest red flag that you would hear companies answering that question? Like, is it something that I would ask them, what's going to make your share price go up, and they tell me marketing? That might be a red flag, but what else?
I think that's a really good question. If it's just associated with catalysts, I think the red it's not even necessarily a red flag, but it's just on the generic or binary option of whether the market likes it or doesn't like it, and it's just on the back of a drill result. Well, then I would say there's a lot of risk you're taking for that to be right there, and then it kind of works back. It's like, what's the business model? How much risk am I taking? If it's a project generation company, I probably have a lot more downside risk because it's not that company's money. So in reality, while the project might take a hit on the potential, how the market sees that potential, but really that company's no worse off than they were before, and now they can move on. And the more I've been in this game, I'll say, that you need more kicks at the can when it comes to exploration. And so if you can find companies that, again, are generating projects, they're putting money into the ground, and you're getting lots of binary answers, and then you can plot along, but it's lasting, so you can get that yes answer, or you can get that market price to move up because the metal price is soaring, and then you got to have the courage to actually sell it and not get too lost in the sky.
What's one company I should go talk to here? You just get one, so think about it.
Yeah. Well, I don't fully know who's presenting or not. If you have a chance, I think if you can quarter them on the floor, you want to talk to Snowline Minerals, Zach Flood. Okay. You'll see he's a big, tall guy. He stands out from the crowd. To me, and I'm biased because it's my number one personal holding. It's one of the top-rated stocks in my newsletters portfolio. But I think the risk to reward for Snowline is about as good as it gets. You're going to see $36 million of exploration spend in 2025. I don't think there's another junior out there, especially with how much of your downside is protected, that can provide that many kicks at the can as Snowline's going to provide you this year. And so I think they're an absolute must talk to.
All right, Matt, when you go and talk to the issuers that are here, if you can only ask them one question, what will that question be?
All right, well, it's 2 in 1. But the question is, what is the next catalyst to look forward to as an investor? And do you have enough capital in the bank to achieve that catalyst, or will you need to come back to market beforehand?
Okay. So it's essentially, do you have enough money to make me money?
Basically. Like, it's my view that if you know that the company is going to be raising before their next catalyst, there's really no reason to buy on the open market as an investor. If you can participate in private placements, it's better to sit on your hands, wait for that deal to be announced, and then evaluate whether you want to participate in the deal. But I have no reason to buy the shares of a company on the open market if there's not a catalyst that's going to occur before the next financing.
Right, and what you're looking for here essentially is just enough money to get them over the line, or is it enough money to do it for 1 or 2 seasons?
Well, the more the merrier. I mean, better still would be to have enough money in the bank to achieve 2 or even 3 catalysts. But we know how it goes in the junior space, particularly with how lean things have been over the past decade plus, to be fair. So I want to see at least 1 catalyst funded. The more the merrier, though.
What would be a red flag here outside of just literally being broke, which is kind of a big red flag, but what else would be a big red flag in your conversation with a company when you start talking about capital?
Well, if the management can't even articulate what that next catalyst is that has the potential to move the share price, that's a problem. Another problem is a company that tells you, yes, we're fully funded through the next catalyst, and then you see 2 or 3 weeks later a financing's announced. And I won't name any names, but we've seen a couple cases of those just in late 2024, so that does happen quite frequently in the industry. I, of course, take note of that as an investor, and it's probably a team that I won't invest in going forward because they weren't honest with me.
So I might want to push him and be like, okay, so what you're saying is you have enough money, so you're not going to go back to the market before you have company changing news.
Yes, make management be very explicit. And again, maybe there's some nuance here, like if a strategic comes in at a massive premium and it's a highly credible group, then maybe you can excuse that. If you have a conversation with them and the company's at $1 per share and they have an upcoming drill program, share price runs up to $2 and they decided to capitalize off that, there's a little bit of discretion there. But assuming no major share price move, if you've been told that there's enough cash in the bank to achieve the next catalyst and then they go ahead and raise anyway, that to me is a red flag as an investor.
Putting you in a spot here a little bit, what's the one company I should go and talk to here at the PDAC? And you only get one.
only get one. Really putting me on the spot. Ridgeline Minerals comes top of mind here. That's Chad Peters' company. We're longtime investors. We participated in their past few financings. And look, they have 5 different drill programs occurring across their suite of projects. 3 of them funded by partners, 2 100% funded. Very high risk stuff that they're working on, no guarantee of success, but just the amount of shots on target that you're getting over the next 6 or 9 months makes me excited as a speculator.
All right, so we have a couple of questions to go and ask them. They're probably on your screen right now. I want to go and put them to the test. Because geology is one thing, and I still think you should watch the previous episode, wink, wink. But if the vehicle is broken and the money doesn't roll, then nothing else does. As always, before we get into it though, please pause the screen and read the warning that's on there, because we're about to talk about high-risk venture capital businesses where failure is the norm and should be the expectation. And in addition to that, I own shares of some of the companies that you're about to hear from, and some of them I also have a business relationship with where they pay for the production of these interviews. So that means there's multiple layers of bias, so please beware of that. All right, so just like the previous video, first thing that I'm going to ask for is a 30-second pitch. They have to be able to briefly and succinctly pique my interest. So if you only have 30 seconds to sell me onto this story, what do you tell me?
I think I'd tell you about the grade, scale, and consistency. Just a high-grade starter pit at the front end of a very large deposit. So it's a unique story, and we're pretty happy to have stumbled into it.
We're extremely pleased because we have one of the largest undeveloped copper deposits held by a junior company and therefore available for a major company to acquire right when they're looking for these type projects. We're also working in one of the hottest places in the world for copper exploration in San Juan, Argentina, where the government's doing everything they can to encourage us to move quickly and produce opportunities to improve the lifestyle of Argentinians.
First off, the casino project that we have in the Yukon is one of the most relevant copper gold porphyries in the world. It's a significant scale. It's attracted investment from some of the smartest folks in the copper space, namely Rio Tinto and Mitsubishi Material, and it's quite advanced. We have a full feasibility study that shows tremendous economics, and we're now driving it through the environmental assessment phase. So one of the things that matters in a space looking for copper and gold.
SIC is fully financed. We have $14 million in the bank. We're planning our largest drill program ever at our RC Gold project in the Yukon. It's in the Tombstone Gold Belt. We've discovered a couple deposits there, and with our 30,000 meters, we hope to discover more.
US Gold Corp, if this is the first time I'm passing by your booth and I've never heard the story before and you've only got 30 seconds to sell me on it, what do you tell me?
You know, we've been flying under the radar, but we're in Wyoming. It's a resource state. We have a fully permitted copper gold project, southeast Wyoming. We're ready to go. We're up in Toronto looking for the financing. Lots of opportunity. We're going to produce a gold copper concentrate, and people are very interested.
Well, it's high-grade gold in Quebec, one of the best addresses for gold exploration and gold mining in the world. 1 million ounces, growing right beside other people's mills and mines, working on making that connection and showing core and the potential for this project to really take off.
You're looking at 7 million ounces, starting right on surface with easy, moderate topography, already has hydro power lines on the property, roads, cell phone service, fiber optic cable, infrastructure that's so important to building this project. And we've made a major discovery here in 2019. 7 million ounces is really just the tip for us. We made some great high-grade discoveries last year, including 16 meters of 9 grams, 4 meters of 33 grams, just at 65 meters depth. We know we can continue to grow this both in grade and ounces, and it's an exciting time to be looking at Yukon and these intrusion-related deposits are, I think, what's going to be the next gold rush.
Well, I tell you that we know how to find lithium. That's what it boils down to. We found it in Quebec, we found it in Greenland, and we're going to keep finding a heck of a lot more.
Well, I think catalysts. You know, we all have great stories to tell. What are the catalysts coming in 2025? Let's forget about what we've done in yesterday, and let's see what we're going to do and how I can help create value to shareholders. 2025 is a big year for us. We're going to have an MRE in the month of March. I'm going to have results from my ore sorting study, which is about 3 months in the month of March. That will allow me to do a PEA on a potential DSO model. So those are great news items I've never had before. on top of coming into an exciting another drill season. We just completed our 6th drill season. We've seen the results from that. We've always been happy. Looking forward to get those drills turned in again.
All right, Jason, let's say this is the first time I'm seeing your booth here at the PDAC, and you've only got 30 seconds to sell me on the story. What do you tell me?
Well, the Escacena project is a 2-discovery copper project in southern Spain. Spain is an excellent jurisdiction to work in. We're surrounded by large, active producing mines. And we also have a gold discovery that we've just made in the last month in northern Spain.
White Gold is a very unique and special project. It's backed by the Power One Group. It's got 2 of the biggest invest mining companies in the world to invest in, and there's a reason for that. Number one, it's in a phenomenal place. It's in the Klondike district of the Yukon. This was the epicenter of the historic gold rush started 125 years ago. Since then, there's been over 20 million ounces of placer gold mined from surface, and almost no modern day exploration was done until about 10 or 15 years ago when our partner and co-founder Sean Ryan went there to find the source of this placer gold. He has been incredibly successful. He's found 2 major multi-million ounce deposits. One is called the Coffee, which was owned by Kaminak, which Goldcorp bought for $500 million. Newmont now has that. The other one is the Golden Saddle, or the White Gold project, which we own. It's over 2.3 million ounces now. It's the 5th highest grade deposit, over 2 million ounces, owned by a junior. That is just one element of our company. We have a massive land package. It's about 750,000 acres. This has been picked over by Sean for the last 10 years, and we have high graded to what we think has the potential for many, many more discoveries. We've seen, and his team and our technical team have seen what led to those discoveries. We think we've cracked the code. We've been doing some early stage discovery drilling on some of them. We've had phenomenal results. Our Betty project, which is next to Newmont's Coffee, we've been hitting 3.5 grams over 50 meters from the surface. We discovered this year a target called Chris Creek near our existing deposit. It is the largest and most intense target we've seen. It looks a lot like our flagship deposit. And what we've also focused on in the last couple of years is the critical mineral opportunities within our portfolio. At the base of our portfolio is a company called Western Copper and Gold. It is one of the largest copper gold porphyries in Canada. We have contiguous properties. We've done a lot of work. We have 2 very large targets which look very similar in terms of their geochemistry to the Casino deposit, Western Copper. They have never been drilled. So that is an exciting opportunity. We're contemplating spinning out all our base metal projects into a new company, and White Gold will become, White Gold Critical Minerals, but it is basically so much opportunity here packed into one company. It truly is a super junior. I think we're heading into the early days of a big commodity super cycle. What you want is good assets in good places with good partners, and that's exactly what White Gold has.
If this was my first time hearing about Capitan and you only have 30 seconds to sell me on the story, what do you tell me?
I would tell you that we are located in Mexico Silver Belt, where 80% of the silver in Mexico, greatest producer of silver in the world, comes from. Right in the center of it. We've already drilled high grades at the project. We've already shown scale with 2.5 kilometers of high grade trend, outcropping in a site that had historical producing mines. So we are getting ready to restart our drilling. It's going to be an exciting year, and we can't wait to see the results.
We've got a very big district scale, belt scale thesis that has connections to the Abitibi gold belts in Wyoming, one of the best jurisdictions in the world. We've got some of the best shareholders. In Kinross just moved to a 19.9% equity. We've got a technical committee with them, so a lot of support and depth in our technical team. And we've got very high-grade system, high-grade gold, copper, silver, lead, and zinc. All again with connections to the timing of the Abitibi gold belts being developed 2.7 billion years ago. In addition to that, we have a tremendous amount of depth from the board level down to our boots on the ground team. A lot of depth of human capital, and our ability to execute has been proven time and time again over the last few years. And that really leads us to the last point. We are very cashed up. We just closed the financing for $8.5 million. We're going to have our most aggressive drilling campaign ever here in 2025. And so we're really excited for a transformational year.
You've got 30 seconds to sell me on inflection. What do you tell me?
We're exploring a belt of rocks in Eastern Australia. It's host of some of the biggest copper gold mines in Australia. We have a partnership with AngloGold to explore the northern extension of this belt that is covered with a blanket of sediments. We have a large 100% owned land package, the biggest land package in New South Wales, over 7,000 square kilometers of ground, and AngloGold is funding us to drill test through this blanket of cover, looking for very large copper gold porphyries.
We're a greenfields explorer backed by a lot of big instos who support us because of our track record of success. We've got a number of projects mainly in Australia at the drill stage, so the next 4 months we'll be drilling 4 different projects.
That's 10 seconds out of the 30. Sounds like you've done it before. I thought this was your first PDAC.
Well, I'll tell you that copper discoveries are few and far between. So when there's a very large copper discovery, it's exciting. When there's 2 copper discoveries, it's super exciting. When 2 copper discoveries have happened in 5 years' time, and there's a company that's on trend with them, with a very large land package, and they're exploring, looking for that 3rd big one, I would say pay attention, because 2 have already been made in this district. And that's what our project is. It's an exploration play in a district with several large discoveries, and I think that's the best place to look.
Well, 30 seconds. We have 5 billion pounds copper, pit constrained in 2 projects. One in Quebec is our classic flagship project called the Opimiska. We're drilling on it as we speak. We just put a news release out, and then we're going to be publishing our PEA. It's the first ever pass at economics on the project. We think it's going to be robust. And then we've got the Cherry, which we just acquired. It's very new to the company. It, like Opimiska, is a large deposit. We think it's going to get substantially larger, and when it does, it's going to benefit from all the legacy infrastructure, such as railroad, power, etc. So we own both these projects outright, 100%, and they're very large, copper-focused with other wonderful metal credits.
30 seconds. Okay, well, as a team, we've worked in the region for 20 years. We've had a lot of success in this region, in these rocks. We acquired the Sherry project over a couple of years in 2018, 2019. We've got a couple of years of work under our belt. The work we've done so far, we've intercepted what we're looking for. Good intercepts of copper, gold, with zinc and silver. We have a lot of exploration to do. We've only just scratched the surface so far. We're currently in the field doing electromagnetics on the ground. We've been very active the last 5 months on our exploration field crews, doing follow-up work on other targets that are quickly becoming known as high priority targets. We like what we see. Gossans, which sticking out of the ground with good geophysical signatures and good grades in the surface. So we'll be drilling soon, and that's probably my 30 seconds, but we expect to be drilling in the next month, and hopefully we can demonstrate to the market the potential.
Right, Francois, let's say this is the first time I'm passing by your booth here at the PDAC, and I've not heard the fan cab story, and you only have 30 seconds to sell me on it. What do you tell me?
Well, it's a junior that has 40-year existence, $20 million in cash and equivalent, $35 million bond on the KWG Ring of Fire, and one of the best projects in New Brunswick for copper gold. Is that sufficient?
Right now, Riverside's doing a share split, and I'm so excited to be here with the CEO of our new company, Blue Jay. So if you buy Riverside right now, you get shares in Riverside, which is doing great, and also shares in the spin-out of Blue Jay Resources, Blue Jay Gold. Really excited about that.
We're going to have to do both then. Blue Jay, why would I want shares in Blue Jay?
What an exciting time to be in exploration. Blue Jay, Ontario, 3 assets, 80 square kilometres, in a brownfields area near a new gold mine, 3rd largest gold mine in the country. Equinox Gold, now with a merger with Calibre, makes more interest in the sector. We've got high-grade gold at surface, testable targets over 12 kilometres of strike length on one project only. So we can be listed in early May and out the door running.
And there's no snakes and spiders and kangaroos, there's only Blue Jays.
Oh, we can bring them in if you want, for sure.
T2 Metals is Canadian listed, TWO is the code. We have a major copper project in Manitoba, 90% owned, moving to 100% owned quite soon. It's got 5 historical resources at surface. It's got an 8 million tonne at 3% mine that was produced in the past. We have excellent relationship with First Nations, recent drilling programs, so we know how to permit, we know how to progress, and a train line running through the project. So anything we find can get back into Flin Flon very quickly and simply.
All right, moving on. There's been a lot of talking here, but are you putting your money where your mouth is? Have the executives been eating their own cooking over the last 12 months, essentially?
So as a management and board, we own about 4% of the company, which is significant for a company that's been around for some time. I own just around 1% myself, just over 1%. I have bought in. I came into the company just a year ago as CEO, and in the first day or the first week, I bought $3 million worth of stock, which is, I think, significant.
So no founder shares for Sandeep?
No, sadly, this was founded quite a while ago, and this was one of the one of these projects that took a while to get its momentum. It's a big project in a small company, and that sometimes goes slowly. But we certainly feel like we've found our momentum here in the last 4 years as the project's gotten very large, again, large enough to attract those significant investors, and very advanced in terms of the stage that we're at.
What would you say the average cost of the shares that you own right now is?
So I bought all that stock on week one that I joined. It was at $1.35 Canadian, and the stock is, sadly trading in the same range right now. So, and I think it's a better buy now, a year later, than when I invested in it then.
So you have to make it go up if you don't want to sleep on the couch.
No, that's the point. The point here is not to make money through a salary. It's to be aligned with investors, and I think we have a lot of torque to executing on our project. Part of the reason is we have a very strong treasury, great project, strong treasury, so we don't need to go back to market for some time. At the end of Q3, we had $75 million in the bank, so we can put our heads down, execute, and unlock value.
Our family owns a large stake in the company. I think we're at around 17% or so. I haven't been buying, but I always feel kind of strangely conflicted about that because, we do have a long period where we're drilling and then when results are coming out and that kind of a thing. That said, I have certainly looked at it and I do think it's a buy. So for what it's worth. But.
Follow-up question to that would also be, what's the average cost that you've paid for those shares? Because I think your family put the land package together originally. You kind of started up the company. So what is how aligned are you with investors?
Very much aligned, especially when it comes to dilution, that sort of a thing. Like we don't have the capital to we came at this as a mom and pop or even just a pop sort of operation, and so we don't have the capital to maintain our stake. Every time we go to the market, it's dilutive for us as it would be for many of our retail shareholders or others who are not going forward. In terms of our cost, it's kind of hard to quantify. It was decades of work. My father going out there in the 1980s and just kind of high risk, no guarantees, and basically somehow raising a family on the back of walking around the woods. I mean, it's quite an accomplishment.
Yeah.
And so this comes at the end of, not the end, but as a result of decades of hard work out there, blood, sweat, and tears, and of course capital put in as well with very high risk capital with very small chance of returns throughout most of the life cycle.
Are you putting your money where your mouth is? Have you been buying shares over the last 12 months?
Yeah, I mean, I've been the CEO for about 8 months now, and I bought about 3.3 million shares on the market. So absolutely, yeah. And it's done well. I'm a happy shareholder. It's gone up. So.
Yeah. What's your average cost of those shares?
I think my average cost is about 20 cents.
Okay.
So we've been trading in the 30s for most of the last few months. So yeah, so I'm up.
As senior management, we do invest actively in the company. Over the last 3 years, collectively, our team has put $3 million in. So we have a large share position because of founding the company. It's spun out of one of our other companies, but we continue to finance alongside all of our other financiers when we do have equity raises.
What would you say your average cost is for the shares that you personally own?
Our average cost, when we spun the company out at $1.28 a share as the mark to market that it came out. It dropped lower than that, so I don't know my actual average. It would probably be sub $1 right now.
Have you been putting any of your own money into the company, though? You're trying to sell other people on it, but have you sold yourself on it?
Yeah, I mean, we get options and stuff. I just exercised a bunch of options recently. So yeah, I do. I do put in money.
Yeah. What would you say your average cost of those shares is?
Probably up around 20 cents overall since I've been in there. But yeah, I'm up around 1 million shares now. The largest shareholder by far is our CEO, Corco. He's always buying on the open market. We like to pride ourselves. We've never sold a share, any of the management. But he's a big holder, probably up around 6%.
Of course, yeah. No, I'm heavily invested. I'm 40 odd years in the mining business. I don't necessarily need to do this, but I was invited to look at the project, and I ended up essentially joining the company, on an equity basis, and so I'm vested in the success of this company.
What would you say the average cost is that you've paid for those shares, or those shares that were kind of founder shares, if you will?
No, well, look, we essentially are an exploration and development company. And so as you look at the exploration side, we pivoted in 2020 towards development on this CK Gold asset in southeast Wyoming. So when I came in, we were trading. Had a market cap of about $30 million. Now that we've gone through the de-risking exercise, all the engineering, got a permit, we're trading at about $110 million US. So we've raised capital along the way, and currently our share price is between $8 and $9 per share.
So your average cost would be closer to what?
My average cost? Yeah. Well, I was last in the market buying at about $5 a share because I had faith that we would succeed with our permit, and gosh, yeah, we got it as promised.
Yeah, I have actually. I've been buying it on about 5 occasions.
Okay.
Yeah.
What's your average cost, the shares that you currently own? How many shares do you own, and what's the average cost?
Probably about 10 million shares. The average cost would be probably 12, 13 cents, something like that.
Are you putting your money where your mouth is, would be the follow-up question. Have you been buying shares of the company in the last 12 months?
I have bought some in the market in the last 12 months, but we're fully capitalized in terms of what we're doing as well. We're funded by Anglo Gold, and we've got a treasury position that hasn't really dropped in the last 2 years. It's more or less sitting at the same because of a management fee we received from Anglo Gold. But we have been nibbling away in the market, but yes.
How many shares do you own, or what percentage of the company do you own?
I own about, indirectly and directly, about 9% of the company.
Okay. What was that founder shares involved in it? Have you paid for those shares in the open market? How did that work for you?
It's a real mix of all sorts of things. There is some founder shares in there, but I think my average cost is probably 6 or 7 cents. But I'm averaging up as we go.
Well, have you not looked at the insider buying, or is that a legitimate question?
Yeah.
Oh, just look at the insider buying.
I like that reaction.
Oh, I'm just thinking you're setting me up. No, the insiders, I believe since the last 2 months, we put about $400,000 into our own stock, and I've sworn I would never buy another share because I'm in the 10th year, and it's a black hole for me, right? So I swore, but even myself, if you go look, I think I bought $50,000 worth myself in the last couple months, Kevin Jen. Anyways, I think we're well over $400,000, just the insiders, in the last couple months. Sorry, I thought you were being facetious.
What's your average cost of capital?
I don't actually know the answer to that question. I would say my ACB would be probably just 15 cents lower than we are right now.
I have been, actually, as a matter of fact. I don't know how much. I'm probably $30,000 this year, give or take, in terms of XXIX. I bought every single share on XXIX on market, and I've been buying for years and years and years. I own 8 or 9 million shares. And I buy it because it's deep value. I mean, we're a $30 million market cap company. It's wonderful value. There's very few copper assets that exist like this in Canada, and we happen to own 2 of them. So I'm a long-term thinker. I mean, I think we're sort of on the cusp in terms of taking off. And I say that every year, but we're optimists here. But with metal prices, I mean, copper well above $450, gold running, it feels promising. But this industry is not a get rich quick. It's a patient person's business. So if you're looking for good quality assets run by good people who have the ability to raise a lot of money, because you need this money to advance our projects and make all of our investors' dreams come true, you should take a look at XXIX.
You might want to change the name to Optimisca one of these days.
I like that. I mean, you should be in the promoter business, Antonio. Instead of wasting your time interviewing promoters, you should be one yourself.
What would you say the average cost is that you've paid for those shares, though, over the years?
That's a good question, because I've been buying all up and down. I'm probably underwater where it is right now.
Have you been buying Brunswick over the last, let's say, a year?
Oh, absolutely. Look, the whole team is a big believer. We are supported by some very good shareholders that believe in what we're doing as well. And so, when we do financing, it's insiders that pick up the checkbook just as much as other shareholders. You have to remember, 35% of Brunswick is held in insider hands. So the stock does well. We are, we'll say, not so much rewarded, but we share in that joy. And we will also share in that pain when the stock goes down. So right now, trading at 10, 15 cents, that's not what we want. But we're in it for the long run. We believe in our asset. We believe in our ability to find more lithium. So we're still buying more stock.
What's the average price that you guys have paid for those 35%?
More than what it's currently trading now, let me tell you that much. So it's going to depend on a case-by-case basis. I mean, we were buying when it was at $1, we were buying when it was at 80, 60 cents. Some people, their average cost of insiders is going to be around that 40-cent mark. Some of them are going to be 20-cent mark. So there's going to be a variety. But we buy at all levels because we like it at every single level.
I have not bought any stock in the company in the last 12 months, no. I do have a large position. I've invested a lot of time. There's times we haven't taken salaries. We have heavily invested already. There's been times we're in blackouts. No, I have not purchased any stock.
What would you say is the average cost of the shares that you currently own, and how many shares is that?
I think around 5 million. My average cost is probably, I've never thought of it that way, it's probably around 15 cents.
Right.
I got to calculate it, but it's probably something like that, yeah.
So you're trying to make me put money into the company. Have you made yourself put money into the company? Are you investing along with shareholders?
I sure am, yes. I've significantly invested. Brian and I are still two of the largest shareholders in the entire business. All of that was through hard dollar investments, building this from the ground up. Our only founder's equity is in warrants, so we actually have to pay for our founder's equity. So yes, more skin in the game than most, I'd say. Management and insiders, post-financing, will still hold about 20% of the shares.
What's the average price you guys have paid for those 20%?
So for Brian and I, probably about 19 to 22 cents. The cheapest round in the history of the company was 13 cents.
My last purchase was in June in the last financing, and my back-end price was 27 cents. I have over $2 million in and 4% of the companies. As the third CEO, I didn't get any founder stock. I've purchased my entire position either in the market or in financing. So, my average cost is just a little bit lower than our current share price of around 24 cents. So it's a great time for people to be looking at Banyan. I'm certainly aligned with my shareholders. I don't do this for a day job. I think this is going to be Yukon's next gold mine, and I'm really excited with what we can add for value this year.
We have, our CEO has. We participated in the recent financings. As well, our chairman has been buying in the market.
So we're not talking about founder shares, those are shares that you guys have actually bought in the market?
Yes. Yeah.
Okay. What would you say the average cost of capital is for you or the rest of your team?
Well, the company's been around for quite a long time, so for some of our directors who've been around for a long time, we're probably around what the cost was originally, but we're talking over 15 years. So they definitely have a lot of skin in the game and a lot of longevity. So we're obviously trying to make here big returns and a big multiple bagger for us. We wouldn't be working in junior mining if we didn't want to do that, but you've got to put your money where your mouth is, and so that's what we've done as a team. We think with the project we've got now, as well as the discoveries that we've made, are getting us to a critical mass. Our goal is to get to 100 million tons, because that's really a supergiant VMS deposit. It's always multiple deposits.
Yeah.
So.
John Mark, have you been buying your own stock recently? Have you been putting your money where your mouth is?
You betcha. Yeah, last trading day on Friday, I bought stock in Riverside, so pretty good. So, and I couldn't because of that until we actually had the blackout. The blackout was over on Friday because we put out the news that we were doing the spin out, and the vote will be on the 31st of March. So maybe you did the insider report and knew that question, but yeah, I continue to buy our own stock, and I'm super excited. I bought more stock in Riverside on Friday.
What's your average cost of capital at this point?
I'm still way above my average capital, but the that's interesting thing is that because I've been doing it so long and all the spin outs and all the other things, it's actually pretty complicated. I've participated in every financing. I've bought money in the market. I never really got many cheap shares. I've been doing it for 17 years. I think my average cost of capital is about 35 cents.
Yeah, absolutely. We've been very careful and very disciplined as a company. So not only do we have great geology, and we have a great team, all ex-Argonaut, we built and operated projects before. But we've been very careful in how we build this company. So we brought long-term investors into the story. We've tried to keep it warrant-free. We've obviously participated as management and directors as well in the company. We're in love with this project, and we believe the time is right now to be working in it.
What do you think is the average cost of the shares that you currently own, and how many shares is that, and what's the average cost?
We are around 100 million shares. Our first private placements were at 20 cents. We did, previous to the one we just closed, we did one at 15 cents. That one was on a premium at our trading, about a 30% premium. We just closed one at 40 cents, also at a premium because we were trading at 30 cents. So there are really no very cheap shares.
in the company.
You're here trying to find investors, trying to sell people on the Mogotes story. Have you been able to sell yourself? Have you been buying shares in the open market recently? What part of the company do you own?
I certainly don't intend to sell myself, but no, I'm a large shareholder, of course. Myself and the people who put the company together, we're approximately 18% of the company, management, the insiders. As far as selling myself, I think it's more about the project here. We're in a very good place. We have some very interesting rocks here from the exploration that we've just started doing in the new ground that we've acquired. It's really exciting, and the assays from those are coming soon, and we'll be able to talk more about substantially, the evidence that we're finding. But we've had really good responses so far from people who understand porphyry and high sulfidation epithermal systems. They understand what it is that we're looking at, what kinds of rocks we're looking at, where we're situated, where the structural trends are, and they're excited. So I think it's very good from that respect.
I want to go back to those shares. When we talk about skin in the game, that's one of the first things that you want to know about a company when you hear about it for the first time. What's the average cost of the shares that you and your team own? You say it's 18% of the company. What's the average cost of those shares?
I can't tell you right now because we've got a bunch of different people in that category. Okay. But suffice to say, we put in a fair bit of money ourselves. We went over this in our first CEO barbecue extensively, so go and review that. But we've put in a fair bit of time and money between myself, Stephen, and the other directors on the board.
I am extremely invested. We closed the financing. We're fully financed for 2025. I invested personally in that financing as well. I am one of the largest shareholders. My partner in Power One, he's the second largest individual shareholder, and these are all shares that were bought.
What is your average cost of those shares?
My average cost is probably somewhere double the current price, 40 or 50 cents. Yeah. We've been investing since 2017. I bought 2 million shares in the last financing.
Absolutely, I invest a lot of money in the company. I'm a very regular buyer in the market. I put 150,000 in the last private placement, which was middle of last year. We've got great shareholders, and I'm happy to be one of those shareholders. In fact, I think I'm the largest shareholder in the company.
What's the average cost of the shares that you've bought?
So I've bought everything from in the 40s down to 10 cents, and the last private placement was at 25 cents, and so sign checks at that one.
Yeah. Let's talk about skin in the game at this point. Have you been buying your own stock recently?
Of course. Management owns more than 10%. The largest shareholder is one of the board member through his private company, and altogether I'd say that close to 30% of all the shares are within and of management and board members.
Were those shares bought in the open market, or are we talking founders shares?
In the open market.
What would you guess the average prices of the shares that you or other management teams own?
Every one of us paid anywhere between 6 to 10 cents, which the price has been basically the same for the past year now. We are all looking for, of course, like our shareholder, to move that up. We're doing, I think, everything right in that direction. We haven't done any dilution in the past 2 years. We're looking forward to use our own fund to develop our project, and we're also looking from money coming from other potential JV partner or potential optioner on some of our properties.
We go into these things because we want to make money, or at least we delude ourselves into believing that we actually can make money on them. So if I bought the stock today, how long is it going to take for the company to double my money?
Well, we have some very interesting milestones to watch. Our company has performed very well over the last year. We're up more than 100%. So a natural question might be, did I miss the boat? Has it already made a run?
Did I?
But no, not at all. What it is we tend to move up in stages marked to some of the major milestones. The increase in our valuation came when we put out the large resource and revealed the full size of the project for the first time. But right now we're very actively working on a PEA, a preliminary economic assessment. We anticipate that will be delivered in about June of this year. And that will be the first time that people will be able to look at the economic parameters wrapped around the project. We now have a fantastic large deposit, but it's hard to tell what that's worth. And when we can show the cost to build it, the cost to produce a pound of copper, and therefore the net present value or the value of the project, that typically opens it up to a large group of investors that need those parameters to be comfortable. So it's very logical when we put out a positive PEA to see a notable increase in share price. And then 18 months later, by the end of 2026, we anticipate we'll put out a pre-feasibility study. So each of those major milestone reports, the PEA and the pre-feas, logically result in a step increase in valuation. We're de-risking the project. We increase the value. It results in the project being more expensive for a major to acquire, but they're often willing to pay more money for a project that is more clear what it'll be like. It's more de-risked moving forward. So that's the typical progression we see moving forward on the project.
Given the state of the junior market, what do you think is needed in the numbers to actually move your share price? Like, what are you hoping to get out?
Well, it's this project. Much of our success over the last few years is because we've been delivering long runs of very exciting grades. So we've had drill holes of more than a kilometer of good grade porphyry mineralization. That was sufficient to move the project. But at the stage we're at now, more of those type of results don't particularly move the project. That's more for the early stages in a project. So right now what we want to see is a project that has an NPV, a demonstrable NPV, that's quite significant. So our current market cap is a little over 300 million, 350 million Canadian on that. So we would like to see an NPV that's notably higher. One way to take a look at it, and a very important consideration for our company, is we're well financed through these next couple of years of heavy lifting. That's due to an agreement that we announced just before Christmas last year with Rio Tinto, whereby Rio Tinto Newton, a division of Rio Tinto, has an option to purchase 20% of our project. To do so, they need to make stage payments that total $250 million US. When we announced the agreement, that was more than the market cap of our company for only 20% of the company. So that's a pretty good indication of what they think the project could be valued at pre-feasibility stage. We've essentially pre-sold an option on what we anticipate is a fair price down the road. Yep. If you took that valuation and applied it to the entire company, it indicates a 3 or 4 time increase in our share price. Now normally that would be somewhat compensated for by us having to issue new shares to raise capital. Yep. But this agreement is an agreement whereby they make staged payments to maintain that option, and they're not for shares. They're just straight cash payments. So we probably don't have to do a financing for this project before we get to pre-feasibility stage, which is a very important consideration for shareholders because you're not fighting that dilution that comes from financings.
I have no idea, but I certainly think the potential is there. And to kind of dip back into my remaining 20 seconds on the start, I think the other thing that I'm really excited about is that we went into this district not with Valley in mind. Valley was just a single showing. It was an idea, just like many other ideas out there, but it was the district that had our attention. That's what we wanted to focus on. So to find something like our Valley deposit right out of the gate is extremely exciting, and it has us that much more excited to go and continue to prove this thesis that there's a district out there. So, I think that even if we don't find anything else, Valley has clear upside. And we're working hard to realize that. But of course, if we find something else out there, then that's just a totally different story.
Guessing the timeline on anything is really hard. I had the same thing this morning leaving with my wife when I asked her, when are you going to be ready? She said 5 minutes, and then 45 minutes we still were not ready to go. But what about the catalyst? Like, what is the thing that would actually matter for the stock price over the next 12 months?
Yeah, I mean, we're working towards some pretty big milestones. We're updating the mineral resource estimate. We're starting work on a preliminary economic assessment. And going back out there, we'll be back out in May drilling and with a renewed focus on a lot of district scale targets as well as expanding Valley. So there's a lot of catalysts coming up, both in terms of the progression of the deposit, but also the exploration upside that we have out there.
How's money right now? Do you have enough capital to make those catalysts happen?
Yeah, we're fully financed through 2025 into 2026. We have about $43 million in the treasury, and we're looking at right now about a $30 million program, similar to what we did last year, which was quite aggressive, 5 drills. We ended up with 35,000 meters out there. So we're ready to hit the ground running again.
If I bought your stock today, how long is it going to take for you to double my money?
I hope, like I said, we have $14 million. We're doing a 30,000 meter drill program. We've already started. We're drilling as of today up in the Yukon. Winter drill program, great access. So our first results should come out in mid-April. So, when the truth machine goes and we see what kind of results we get, maybe that'd be the catalyst for you.
What results are needed, or what results do you hope for that could actually move the stock here?
Yeah, I think the one thing about our deposit, the Blackjack, we've been focused on is it's higher grade. It's a bulk tonnage, reduced intrusion-related gold deposit, but the grades we're getting are a gram. We've been hitting higher grades as we go down to depth. If we see that to continue and we see potential for other higher grade, above the typical 0.6 grams, you kind of get in these systems moving up to the 1 gram that we have, or hopefully even up to the 1.5 grams, 1.6 that Snowline has discovered in that same style of deposit. That'll move the needle a lot.
And you said you have money to make all that happen. Does that mean that you're not going to be raising capital in 2025?
We don't need to, we're a junior mining company, so you never know what happens. But yeah, we're fully financed. Our budget is about $10 million. We have 14.5, so we're good to go.
Okay. G&A, what's that running for 2025?
It's a little bit more now as we get more successful. We're doing that 30,000 meter program. So, the exact G&A costs, I'm not sure. We all consult to the company, so our costs are relatively low. I think you've looked at that before. I don't know the exact numbers, but I know we squeeze the dime pretty hard. The queen is riding on the blue nose. That's a Canadian expression.
Look, that's always a dangerous question. I don't try to forecast share prices and whatnot. All I know is we have a very valuable asset. We've de-risked it significantly, and now we have the capital to continue to de-risk it. If you look around, there's maybe a handful of these things in the world that matter in terms of big copper porphyries that can deliver early next decade, which is kind of the timeline for us. And if you have a geopolitical sensitivity, a risk aversion, it's not even a list. There's so few of those things out there. So we know it matters. It's been de-risked and endorsed. And I think if you're a shareholder now, there's always risk of it going lower. If copper goes $3, we'll be lower. But I think this is proven to be a bit of a floor. Every time we've gotten to these prices, our existing shareholders have bought what they can. And I think the upside is significant.
Guessing timing on anything is really not at all easy. What about catalysts, though? What is it that you're doing right now that, let's say, over 12 months could result in a significant share price improvement?
And I think that's the better way to phrase that question. We have a really important year in front of us. Mid-year this summer, we'll be submitting our environmental assessment. It's a big milestone for the company in terms of something we've not been able to quite get done previously. Thereafter, we'll be working with our regulator and our affected First Nations to highlight the project and advance it through permitting. So over that course of the next 12 months, we expect a significant amount of catalysts on that front. And that's alongside quite a bit of movement on the infrastructure side, where we've had in aggregate north of $200 million spent or committed on behalf of our project by governments, both federal and in the Yukon. So those will be the kind of key movers for the stock, alongside just leverage to both significant copper and gold resources.
A little redundant, because you just told me this, that you have enough money, but I don't typically ask you, do you have enough money to make that catalyst happen? Let's maybe turn it around a little bit for you. When or if you make that catalyst happen, how much money are you going to be left with?
Yeah, look, we have runway for the next few years, so we're in a tremendous space from a balance sheet perspective. And at this point, we have the money to get to our major catalysts. So anyone that wants to buy the stock can't really wait for financing. They've got to step into the market and do so.
Seems like you knew what I was going to ask you, because that would have been my follow-up question. Can I buy into the financing?
Sadly, no.
Look, we've done our studies at $2,100 gold and $4.10 copper. Gold is flirting at $3,000 per share and flirting with $450, and we are poised for development. So there's a lot of interest. So, goodness, doubling your money, it could happen shortly.
Well, let's talk more specifically about what it is that you're going to do that's going to move your share price. Because a lot of the times you hear stories around here, people saying we're going to add shareholder value. Value is not necessarily price. So what is it that you can do with US Gold Corp that's going to move the stock price?
All right, so look, we have a cap table. We've got 12.3 million shares outstanding. There are a few warrants outstanding. But in comparison to many junior mining companies that have diluted their stock, we as owners are very careful with our cap table. So fortunately, as we move forward now, this financing is going to be probably debt, maybe a little bit of forward sale of some of our product, but also the equipment suppliers want to sell their equipment, so we're looking for long-term, low-interest rate notes there. So as you as you look at putting the debt package together, that demonstrates that the pathway to the $277 million that we need to put this project into operation is very reasonable, and the equity component is very manageable without excessive dilution.
What's kind of the split that you're thinking, debt to equity, and how much money are we talking about here?
All right, so we've just updated our numbers. We've got another study. It's dated February. All new equipment pricing. That's $277 million of initial capital. We're looking at $30 million of working capital. So let's call it $300 million. And on a debt to equity ratio, gosh, we'll see where that goes. But 20% equity, the balance in debt, or long-term lower interest rate notes.
What's the timeline to make that happen again?
Well, look, we've got some interesting offers probably on the table in the short term, and with the money in place, we can break ground toward the end of the year. We can be in production in 2027. So moving on right along.
And that's been US Gold Corp, USAU on the NASDAQ.
Yes, our ticker symbol is USAU, great ticker symbol, and NASDAQ listed on the NASDAQ exchange. We have a fairly tight share structure, but we are trading fairly regularly now, and a lot of interest in the company. It's a good time to be involved.
People come to these places hoping to find something they're going to make money on, and although that doesn't happen all too often in mining, to the best of your guessing abilities, how long would it take for me to double my money if I bought your stock today?
Well, you should know, Antonio, that's an impossible question to answer. But listen, all of these companies are undervalued, right? Gold equities are severely undervalued compared to the investment opportunities tied to physical gold. And so every CEO here will say the same thing. They're very undervalued. And you've got to sift through those companies to find the ones with real assets and grade and location and a genuine path to delivering that value and realizing that value. So I would say Radisson is right up there with the best of them in that category. And when that big revaluation happens for gold equities, which is how you're going to get your doubling, you're going to see companies like ours, lead the pack. It always starts with the bigger companies. It goes down to the smaller companies. And when it gets to the smaller companies, it gets to the ones that have got real ounces in the ground and a quality story and a quality path, ultimately to mining. So that's what Radisson is. So will that be, next month? Will it be in 6 months? Will it be this year? Next year? I can't tell you. But that is the investment thesis for gold stocks right now. And it's a fantastically positive outlook.
I was actually hoping that you wouldn't tell me. That's kind of trying to catch you there in the spot. Couldn't.
Sorry.
But
So
what
I
is
didn't-
it?
I didn't tell you.
Yeah, good. What is the what's the catalyst though that you think is going to move Radisson specifically? Like, what's something that you can do within the company that you think is going to result in an appreciation in the share price?
Well, I think there's two bows to the arrow, two arrows to the bow there in that question. The first one is the drilling, which isn't a catalyst. It's a continual demonstration of growth of the project with high grade intercepts going down in the project. We've got 1 million ounces right now. We're doing a drill campaign that's designed to telegraph the direction towards 3 million ounces, right? And so far so good. So that is a catalyst which is building and developing. A more specific catalyst is, the other part of our business is working out the development path. We have an MOU with Gold, who are the owners of one of the mills nearby, it's the Dwyen mill attached to the Westwood mine. Under that MOU, we've done a milling assessment and metallurgical work. We've demonstrated positive numbers for our ore going to that mill, and that's allowing us now to do a preliminary economic assessment, the first mining study, economic study, to work out what is the value of this project based on the current 1 million ounces, without having to build our own mill, our own tailings facility, shipping the ore to that mill and seeing it processed in that mill. What's that worth? And that PEA is going to, I think, open people's eyes to the modest capital profile of this type of project and the value attributes of this type of project.
And I think you have enough money to get the company over that threshold. How much money are you going to be left with once that's completed or at the end of the year?
Well, I think we started the year with 9 million. 6 million or so was of which was flow through. 3 million was hard. So we'll be left with a couple of $1 million of hard dollars probably at the end of the year after we've done that work. And of course, Radisson, like many junior explorers, is finances every year, right? So there'll be a financing to replace those funds at some stage. But fully funded with everything we want to do right now. Fully funded for that drill program. Fully funded for this PEA work and some of this mining assessment, mining study type work.
We're really, if you look at what SCP is our coverage for research, they've got a 75-cent target. We're trading at around 14 cents right now. So there's a 50 million market cap company. But to double that, all it really takes is one discovery. So one hole out of one of the 7 targets that we've got in the south, as well as the 2 targets that we have at the northern project, any one of those could really double the stock.
Is that something you want to go and test this year?
Our 2025 program is our most aggressive program as far as the number of targets. We've actually got 7,000 meters planned for the first half of the year, but it's the number of targets that's really scintillating, I think, for an investor, because the chances of hitting at another deposit when you've already got 2 deposits at our main flagship Escacina project is very high.
What would hitting mean in this case? What is it exactly that you think you need to hit in order to actually move the stock price?
I think we're really focused on copper. So I would say if you look at copper as your primary and you say, okay, if they hit copper at any significant amount, so let's say 0.5% or higher, you're going to do better than most of the other projects that are active miners in the belt. So if you hit it over 0.5% copper or higher, we were fortunate. Our La Romana deposit essentially is a near-surface deposit. It's really the only potential open pit in any of the other mines in the belt. Most of these deposits in southern Spain are being found at 150, 200, 300 meters underground. So you need to have much higher grades the deeper you go. So we can actually have a very profitable project because we're so close to surface. If we hit something else that's close to surface, that's a really game changer for us.
The drill program you just told me about, is that fully funded, or do you have to raise capital before you can actually do it?
That's fully funded. So I think obviously we would probably look at what's our next financing going to look like. And at the end of the day, we're a very exploration focused team. So what we want to do is we obviously want to hit. And if we hit and it has a positive reaction in the market, then we'll be able to raise at a higher price and we'll have a bigger drill program.
Okay. That bigger drill program, is that something that would still be for 2025, or is it season related?
No, I mean, we're really quite fortunate with our project in the south, because in Spain, we're just north of Sevilla, 25-minute drive north of Sevilla. And that project, you can drill basically all year round. I mean, in that area, they get an average of 10 days of rain a year. So it's wonderful topography. We can actually move drills on a daily basis to a different target if we want to. So it's very, very quick to redeploy. Up north in Carmenas, it's more seasonal in that in the wintertime it's up in the mountains, so they do get snow. So that has actually delayed some of our drilling this year. We're back drilling again there, but again, it could take another snowfall and we get delayed by another week or something. So once we get into April onwards, April to say November, I think drilling is all the time up there.
Next up is kind of the impossible question. If I did buy your stock today, how long is it going to take for you to double my money?
I think actually by May of this year. And the way I'm doing that simply is with this transaction with Blue Jay. Right now, Riverside's trading at around 15 Canadian cents. The price and the financing, we hope, will be 50 cents for Blue Jay. We're doing a 5-to-1 shares, 5 shares of Riverside for 1 share of Blue Jay Gold. 50 cents, 5-to-1 is 10 cents. So Riverside's trading at 15 cents right now. I think we'll get 5 cents additional value out of the work that we're doing and what we're seeing. So I see that we could have a double within the next 6 weeks. So that's why I'm here. I'm really excited about what we're doing.
Seems like it. What is the specific catalyst within Riverside on the side of, outside of the transaction that you're doing it? What is a specific catalyst that could actually result in your stock price moving?
Totally. Right now is with Mexico, with the Cecilia project. We're now in the 2025 drill program. We're really excited in the exploration program going towards drilling. And last, when we did the drilling, we hit gold in 5 holes. 4 of them hit gold. And we're very excited now for 2025, so that could be a big catalyst. Second catalyst is in British Columbia, again on gold. High-grade gold, we're doing exploration there, so I'm super excited by that potential. And the third thing is rare earth elements. I think what's happening, it's a little longer, but what's happening in China, what's happening in the overall market, Riverside having rare earth element projects, there could be a re-rating. And of course, you always get the royalties. Riverside has royalties in the United States, Mexico, and Canada, and we have $4 million cash. So Riverside's in a great position. We're not financing either. So by buying Riverside right now, you have exposure to 3 or 4 opportunities and not a financing.
So if I didn't want to buy stock over the next 12 months, I cannot wait for financing. You're not expecting any in the next 12 months.
That's correct. In fact, we haven't for the last 60 months behind us either. So for the last 5 years, we've not done any substantial financing. The only small financing we did was for a small flow-through for what we've created in Blue Jay. And that was simply, we already had $6 million cash in the bank, but to use the government credit, we needed to do a small charity financing where we place those shares with our European shareholders. They have over 40% of the company, a very strong European shareholder base, and I loved being with you the last time together in Frankfurt where we had a video together.
Well, look, it could happen very quickly or it could take a long time. I mean, I don't read tea leaves any better than you or anybody else. It's just a question of, look, anybody who buys shares has to have patience. We do know, the flip side to that is that we do know things can change very, very quickly in a matter of a day, a week. It just, you have to, either a catalyst occurs or the momentum shifts. So there's an awful lot of beta, an awful lot of torque in the industry in general. That's not just exclusive to XXIX, but we've certainly seen it there. We're way off our highs. I mean, so, the value's there. We've been there before. We're going to go back there again in terms of highs, and eventually we hit new highs. I do believe there's going to be, when we do click, the industry does click, and the attention comes back to the metals and mining industries, we're all going to be valued in a completely new paradigm. I really do believe that. Now, that's not, it's not necessarily going to happen today or tomorrow, but that's the sort of the thesis of XXIX and the ore group in general. It's buy good quality assets, own it. Okay, so make sure you own the asset so that if it does take longer, you're not going to lose it in some silly option deal or you have debt where there's undue risk. But if you can own your assets, I mean, you can afford to be patient. If you have people that can raise capital and allocate it intelligently and sit patiently and not be forced to sell, I think there's a lot of upside.
What do you think is going to be the catalyst? Because we're talking about market beta essentially here, but that's not something you control. You could control the alpha, though. What is something that you could do within XXIX that is actually going to move the share price?
Drilling, defining the economics in terms of the PEA. On one project, be project specific. For Opemiska, it's really about additional drill holes, finding out if that saddle zone is going to add tons. Even if it doesn't, the PEA, I think, is going to be quite robust. So there's really no downside to this drill program that we're doing, only upside. And then we have to impress. We have to show strong, robust numbers, payback, and a long mine life, as well as Opemiska. I think a critical component is us defining a mine plan relative to the town and how we fit in that and how we manage those risks. When it comes to Cherry, to me, it's all about drilling. That project is absolutely starving for drilling, so we gotta deliver good results on an incremental basis on a per drill hole, and then how does that all fit into the context of defining a brand new resource, showing something robust and large, because when it comes to copper projects, size does matter.
Well, do you have money in the bank right now, if I'm not mistaken? Is that enough money so that you don't have to raise at these valuations?
We never want to raise at these valuations, but I always say we're always raising money. It's just a function of what time and what cost. So we don't, with the gun's not to our head, so we got about $5 million in the bank and some marketable securities, so we have money. But in order to answer all the questions that we have, which are a lot, we're going to be needing to raise money, just like everybody here. So it's just trying to wait for the right price, the right term, and from our perspective, we're really trying to get the right investors in. So that's, as opposed to just doing a typical, street financing where it's 4 month plus a day holders, we're looking for strategics. I think that's the best capital that you can get. It's long-term capital. It gives validation to the team, the projects. Those are very difficult to attain, but I think our group has shown time and time again we've done a good job at doing deals with major mining companies. So that's part of my objective. I hope to deliver it. Time will tell.
If I bought your stock today, when can I hope to double my money?
Well, we're drilling right now, and we're drilling around a very interesting target we announced about 3 weeks ago. So as I mentioned, we're looking for big porphyries undercover. We just announced we actually hit porphyry-style mineralization on our project called Trangi, and this is going to be a very pivotal few weeks and months for the company. We're now stepping out around that hole, which didn't give us headline numbers in terms of drill intercepts, but ultimately we're looking for something very, very big, and the next few weeks are going to be key. So I'm not sure that answers your question, but there's a lot of things happening right now in terms of drilling, and as I say, we're looking for something very, very big in obviously a fabulous mining-friendly jurisdiction, and it's all paid for by AngloGold.
I'm not even sure you're allowed to answer that question the way I asked it, but what I'm really after here is the catalyst. I mean, you told me about the drilling. What is it that you expect to see that would actually move the share price?
So there's two things. There's the drilling I just mentioned. So there's direct drilling results, hopefully in and around this area that we announced the positive intercepts. And then the other big thing that's going to come up fairly soon is the end of our Phase 1 agreement with AngloGold. So AngloGold was spending $10 million over Phase 1, and that Phase 1 is coming to an end over the coming weeks, and that will give AngloGold the right to select up to 5 of individual projects, where there's a mechanism then where they can earn up to 75% by spending $27 million on each of the targets, and then by completing a pre-feasibility study as well. So that decision point is coming up here, and that'll be a big catalyst. Whether they select 1, 2, or 4, who knows? But that should have an impact.
And you don't have to raise any capital before that capital is announced?
We do not. No, we're carried all the way through to pre-feasibility level with these targets.
Right. G&A and everything else is covered. By the time that catalyst hopefully comes out, how much money are you going to have in the bank?
We're sitting around about $2.5 million, and as I say, it's been that way for close to 2 years now. So that 10% management fee we receive from AngloGold for managing the exploration program produces about $1 million, $1.2 million every year, and we see that continuing at this point. But no guarantees, obviously, but our treasury has been essentially flat or flattish over the last couple of years.
One last thing, there's 6 companies in the Newquest Capital Group. I had to use both hands to count them, so yeah, there are 6. How many? What's your favorite company? Kind of putting you on the spot here, but if it's not Inflection, what's the second one?
That's a tough question to answer. I love Headwater Gold. That's a company that's focused on high-grade epithermal deposits in the western United States, and we've got a big partnership there with Yukon Mining. So yes, I think Headwater, that's a solid bet all day long. But yes, that would be the one probably.
Well, we're expect to be drilling soon, and we expect to hit good results, and hopefully the market will see value in that, and then that could potentially be a double right there.
When do you think you're going to have assays out? Because I suppose that's going to be the catalyst that you expect to move the share price here. When are we going to see those assays?
Well, if we start drilling in a month, probably a 2-month lag time for assays, so that puts us into May, June.
Okay, kind of end of Q2. Do you have enough money to get to and through that catalyst?
Yep, absolutely. We have funds for all of our near-term exploration plans.
Right.
Yeah.
So no capital raisings expected before you actually have something that could potentially move your share price. Would you have to raise on the back of that, though?
That's right. We will have to raise after that, later this year. But again, our strategy is to drill, demonstrate value, and then raise additional funds after that.
When can I hope to double my money?
I mean, I tell you, you know what? When you look at where we're sitting right now, with the work that we've done, with the assets that we've discovered, I would like to say pretty damn quickly. But look, all things considered, you double your money because management does a good job, puts money into the ground, advance the asset, has a clear strategy. And that's what we have in Brunswick, right? We have an ability to finance ourselves, we have an ability to find lithium, and that's what we're going to keep doing, right? So whether it's next week, next month, next year, eventually everyone makes money. I can't make the promise on the timing, but I can make the promise that we are going to find things and reward our shareholders.
What is it that you can do specifically with Brunswick, though? Something that could actually create a share price moving event?
You know, I always say you're one drill hole away from having a share price moving event, right? That's what we're doing right now. We are drilling at our main asset in Mirage. This summer we'll be in Greenland, following up on our first confirmed lithium discovery in the country of Greenland. If anybody ever reads about lithium in Greenland, it's because of Brunswick exploration. And we've got a lot more work that we can do down there. We've staked every single viable target in that country. So I promise you, I'm quite confident we'll find more lithium in Greenland. Then we're going to be drilling again at some of our assets in Quebec. We're going to be putting out a resource on Mirage by year end. I mean, you want moving on the share price, you need to be active. And that's our big belief in Brunswick. Bear market, bull market, doesn't make a difference. You have to justify your existence to shareholders. And we're our own shareholders in this. And so we make sure that we're always working. We're always doing something, always pushing the envelope so that we have that market moving event.
Yeah. Do you have enough money to get over that line? Do you have enough money to get those catalysts going without having to tap the market at these depressed valuations?
So to me, first of all, yes, absolutely. Second of all, it's more than that. It's having the strong shareholder support, having shareholders who are in this for the long term, and being able to attract marquee shareholders. That's what matters. It's never so much about the amount of shares that you issue. It's about who are you raising those shares with. Are there hedge funds that are going to vomit out your shares 3 weeks from now? Are they going to stick around for 6 months, 2 years, 6 years? That's much more important than any amount of dilution. Not to say that dilution doesn't matter, but it really is important who you raise with. And that's always something we've been blessed inside Brunswick. We've identified people that share the same vision as us of building a very unique lithium-focused exploration company, the likes that frankly doesn't exist out there. We're the only ones doing this type of work.
I have to be careful how I respond to that for securities laws purposes, but it's all about whether or not we make a discovery from here. Look, it's a difficult thing to do, to make a discovery. I'm not going to say that it's easy or that the probabilities are very high. It's a low probability thing to make a discovery. But what we have is a land package and a prospect where we think the probability is much higher than anywhere else, simply because of where we're situated in terms of multiple discoveries that have been made here. We have a lot of alterations, geochemical signatures in the soils and in the ground. And the rocks we're seeing are very attractive. So in the next 12 months or 24 months, if we're positioned well and we are able to make a discovery, then double should not be a difficult thing to conceive of. Much more than double, I would say, if a substantial discovery is made. Of course, we need to make that discovery. So I don't want to make it sound like it's a trivial thing. Yeah.
Do you have enough money to make that happen? Of course, if luck is on your side and if everything is correct, do you have enough money to get over that catalyst?
Yeah, I think so, and we've been very able to attract capital to the project. The project is very high quality. We have $8 million in cash at the moment, and so we're positioned quite well. We've been very careful with the capital, and we've been systematically exploring, and that's what I've always conveyed to you and to everyone else, is that we systematically acquiring the data we need to make the best informed decisions from an exploration perspective. So we're positioned very well now. Yeah.
So if you did make me buy shares today, when can I hope to double my money?
Well, you can hope for it every day of your life, Antonio, but I can't guarantee anything. What I can guarantee is we'll execute on our plans, and if we're fortunate enough to make a big discovery as we intend to do through this portfolio of 17 high-grade targets, doubling your money should be able to be achievable. But there's no guarantees. This is an incredibly risky, speculative environment. You know that. I know that. So you can hope all you want, but our job is to de-risk this through good work, good technical exploration.
Let's get a little bit more specific on what it's going to take, though. I mean, you're talking about catalysts and drilling and all that. What is it going to take to move the stock price? Like, what do you want to see in the core, and when are you going to see that buy?
Yeah, so like I said, this year we're embarking on our biggest drill campaign ever at our Apex target. We've got 5,000 meters planned initially to start. Surface samples out of outcrop, as you see on the table here, they ran 46.8 grams per ton gold, 7.8% copper, 2% zinc, 0.5% lead. So as we look to start drilling out this system, we want to see continuity, right? We've been able to map this structure along the surface over 2.5 kilometers, as well as parallel shear zones that are all lighting up with mineralization. So this is a big system potential, and we'll do it exactly how we've done everything to date, which is systematically. So starting with our known zones, drilling the depth extensions of those and working outwards in a systematic kind of drilling approach. What we hope to see is these veins carrying at depth. We want to see obviously the mineralization, the alteration, and we want to see really how the geology is changing or staying the same as we drill this out. Because we have a complex greenstone belt, which is exactly what we want, the right types of rocks in the right structures, and they're near vertical as we've mapped them at surface. So ideally, as we see in the Abitibi and other orogenic belts, these can go very, very deep. So we'll be testing anywhere from surface to about 500 meters vertical depth in this go-round.
You just raised capital. You told me that's going to be enough to drill. Does that mean you're not going to be raising capital over the next 12 months?
Well, I'll never say never on that. I mean, we're in an industry where, you need to raise capital to develop your projects. And so if we have some early success, there's a chance we could raise more capital to really add some fuel to the fire and get more drilling out of our season. So I wouldn't say that we're opposed to it, but we've put enough capital in the bank to comfortably do our program this year to carry our fees and our G&A for probably about 2 years. So we feel pretty good about where we're at on the capital raising side, but we're never going to close the door on an opportunity if we start seeing what we want to see and we want to ramp up quickly. And to that end, we've designed the program with the flexibility to do that. So our permits and everything are much more expansive than what we're starting with this 5,000 meters. So if we have success, we have the ability to ramp up as we're kind of continuing through the program throughout this year.
So if I did buy your stock today, how long is it going to take for you to double my money?
I don't have a financial advice license. Well, hopefully not long, because our share price at the moment is a bit down in the dumps like a lot of companies.
Why?
For no apparent reason, just general market conditions. So nothing's changed. In fact, the fundamentals have got better. Our prospects are more advanced. The gold price is higher. We're nearer to drilling. But despite that, the lack of interest in the market is what drives it.
What do you do to fix it? And is something within the company that you can do, put out a catalyst or something that could move the share price in a positive direction, hopefully?
Yeah, look, I'm a firm believer. I take no notice of markets or commodity price cycles. We look for big things that are lowest cost quartile operations so that they'll withstand cycles. And we can control what we look for. We can't control what's in the ground, but we don't worry about all the noise outside of what people think X commodity is going to do or not. We look for something that's going to be quality. If it's not, we monetize it. We sell it to somebody else. Because if you persist in something that's not the best, you'll corner yourself, and it just makes life hard for yourself and your shareholders.
So with the projects that you have right now, which one do you want to keep? Which one do you want to get rid of?
Well, the next 4 months of drilling that we're going to do will determine that. So 4 separate projects, 4 separate drill programs. One of those in particular, it's just a single hole shot, and it'll be a binary outcome. If it's no good, it goes. If it's good, then it's off to the races. But that's what our shareholders like. They don't like us over-drilling and staying too long in a particular project because it becomes an opportunity cost.
Define good for me. I mean, what would be good in this situation? To me, as a speculator, good would be something that moves the share price, but that doesn't always seem to coincide with what the rocks think.
Yeah, the sort of things we're looking for, in this case, it's a copper-gold porphyry. We're 50 kilometres from Cadia, one of the biggest copper-gold porphyries in the world. We've got all the right geophysical signatures and so on. And it should be fairly evident from one drill hole if we're in the right ballpark. It won't necessarily get us to find the ball, but it gives us the confidence to persist or go.
Right. Do you have enough money to get to the answer of that unanswered question, essentially?
Yeah, we've got enough money to do the drilling we've got planned. Obviously, everybody needs more money. So
do I.
Yeah.
Are you going to have to raise capital this year, though?
This year sometime, for sure. Yeah.
Okay. Before the drill program. When's the season start for you?
Now. So in Australia, we don't really have a drilling season as such. We can drill pretty well any time. So it's more a case of when we've done the geophysics and so on. In the case of drilling on farmland, when the crops have come off so that we can get on the ground and so on.
I'm not sure we're allowed to guess that, but I'll tell you what our value catalysts are. We're currently at about $5-6 Canadian per ounce. Some of our peers with the same style of deposits, less infrastructure, smaller resource, are trading at $45 to $100 per ounce. So, there is a real re-rate. Why do we have an overhang? Why are we? It's largely been because of the incident that happened last June with our neighbor. So we're one of these kind of black swans where something affected somebody else, and it's pushed down our stock. Meanwhile, we're funded. We're about to go drilling again, following up on that high grade, which honestly has been generating a lot of excitement here. We'll have a resource update in Q2. We'll have drill results through the fall. And then our maiden PEA, which will give us a snapshot of our economics by Q4. And the reason we're doing that is to earn 100% of the property. And we know we can actually continue to add a lot of ounces and high grade ounces, which will drive our economics. So it'll be a bit of a 1-2 punch, some results. And the results from this summer won't go into that PEA. the PEA, which I think will show some pretty exciting economics at these gold prices, considering our low strip ratio. We've got some real clear high starter pits, and you can see that in the trends of high grade that we have, and then we'll have drill results saying, and that's not all, we know we can make this better, plan to update it again in 2026, and then I think this project will be a very compelling story.
So essentially, you're saying there's a discount on the story right now because of what happened with the neighbors. You do expect to get rid of that discount because of the work that you're going to do. So you were discounted on, let's call it beta, but you want to get rid of that discount through alpha. Am I getting that correctly?
Yeah, and the other part of that discount that'll go away is the receiver will trade that block, and we're working with them to put it into some very solid hands. So I think once that happens, and they've got a lot of process to go through, I've been able to place that stock for a while. I think there's a bit of a misconception that they're going to dump it in the market, and of course they have a duty to sell it in an orderly manner to get the most value. But there's lots of people that thought they missed Banyan that want all or part of that block of stock. So once with those two things, I think Banyan will be off to a pretty great 2025.
You said you have enough money in the bank to make that happen. How much money are you going to be left with once you have the MRE out?
The MRE, well, that's coming up here fairly soon in second quarter, so we'll still have probably $9 million by then, and we get revenue, right? So our revenue season will start in April, might even start in March here, and we expect probably $1 million, maybe more. Last year we made $1.5 million, so that covers a lot of our G&A. So we budgeted to be able to drill 10,000 meters, put out our MRE and our PEA, and then we've got a little bit of extra room to upsize our drilling and do a little bit of other exploration, and still leave ourselves with over $3 million at the end of the year. So we're pretty frugal. Our all-in drill cost is only $330 a meter Canadian, so we're pretty efficient, and we can deliver a lot with that.
Well, that's a hard question to answer. That would be very promotional to say, but I think we're heading into a better silver market. Probably in the next weeks to months. It's hard to say when exactly it would start, but I think all the fundamentals are there. And more importantly, even beyond the silver markets, silver stories are really not around that much. Very recently, we had two big takeovers. Gato Silver and Silvercrest, both plus billion-dollar takeovers, both in Mexico, both in intermediate sulfidation deposits. I think that's showing the interest there is from the silver producers in the silver stories. Once you take out those two, there's really not much in the pipeline. There's a couple good stories out there, but I think what we want to be is the next destination for those dollars that are looking for growth opportunities. Exactly for people who are looking to double, triple their capital. When exactly, it's really hard to say. It's going to depend on the market, it's going to depend on results. But what I will tell them is I do believe that conditions overall for silver are improving, that the market is getting smaller, making it better for opportunities like us to be around. And we're funded and we're getting active. So it's a good time to be getting into the story.
That's market beta that we're talking about. So hopefully, hoping for a lift in the share price because of the silver market. What about alpha? What is it that you can specifically do, some catalysts that would actually result in a share price appreciation?
Well, there's a number of things. We obviously are restarting the drilling. Drill results are going to be coming in weeks to months with this 10,000 meter program we just announced. We're going to continue to work on refining the other targets we have at the project because we have multiple targets there that we want to continue drill testing. We are also looking to expand our land position around the project, so that's something that it's been ongoing since the beginning. But we're trying to work on that as well. We have an update we started working on an update of the resource on the oxide gold deposit we call Capitan Hill. That started at 300,000 ounces of gold inferred resource. But this was at the beginning of the company, 2020, 2021. We basically doubled the footprint of that deposit. We haven't announced any new estimate on that. We're going to do it now. So that's coming very soon, in a matter of months.
And do you have money to make all that happen, get it kind of across the line? You don't have to raise capital before doing all that work, do you?
That's right. We're completely funded for this year.
Okay.
Yeah.
Good.
Yeah.
So how much money are you going to have at the end of this year when the capital is, or when the catalyst has been announced?
Well, I think I'm not entirely sure. We'll see. I think we're funded for all the work program this year and maybe a little more. It'll have to come to how hard we go in the drilling. That depends on results as well. I'm hoping that it'll go really well. We have a warrant as well that might bring additional cash later on. So we can't exactly say when that could happen, but that's an additional source of cash that we might be having.
Here's another quirky question. If I bought stock today, when can I expect to double my money?
If somebody told you an answer to that question, they were
I'd
lying
walk
to
away.
you. Yeah, well, no, because I can come up with predictions, and I've been playing this market for 35 years. Yeah. I don't know the answer to that question. What I do know, there's a difference between price and value. I really believe the value of what we've done, what you see at a $45 million market cap is what we are today, Canadian dollars. Still have $7 million hard dollars in the bank. Hopefully that resource that you're going to see in a couple of weeks will be about 1 million ounces of very high-grade gold. But that's, no shortage of runway. We're not cut off anywhere. It's just, so I don't know what the price is because I don't know what the market's going to do. Now, if I was a developer, it's really easy to come up with those numbers because it's just a mathematical equation. Yeah. In this exploration game, I don't know. I think I'm worth 4x than I am right now. But the market's going to determine that. Although, just look at the perseverance, what we've done. We're not sweating. We're happy. And if I have to go however long it takes, we'll keep doing what I'm doing.
Talk to me, Scotty, specifically then. What can you do that is actually going to result in the market realizing that what you said is a 4x value?
Well, what I'm going to do potentially, and you're going to see this, I need that MRE because I'm not allowed to talk about numbers, right? I'm more excited about the ore sorting studies. If I can upgrade my ore, we are looking at DSO models. So there's a lot of companies in my area. If you look at Skeena Resources, it's a DSO model. And even when it was SK Creek, it was. That shipping port that Bruce Jack is shipping to, Red Chris and Skeena, I'm the second closest mine, as I think, on the planet Earth, as close as we are to a direct shipping ore facility. I'm only 40 kilometers from that. I can take rocks, and I've just learned this recently, so here, the news flash. Rocks from Scotty, not from the port, to get to China for $51 a ton. That's something I've learned just recently, and so we're kind of working on a DSO model, trying to differentiate ourselves from the rest of just a junior exploration company, because it's really hard for people to evaluate, my great story against his great story, or this guy's great story, and they are great stories. But we're going to try and differentiate ourselves, and so we're working on preliminary DSO models. So I think until I have numbers, until I have that resource, I'm not allowed to say things, but I think you'll see catalysts up to a PEA on that DSO model in 2025.
Do you have money to go to and through those catalysts?
Well, I have $7 million hard dollars in the treasury that allows me to do at least a program like I did last year and 2 years of G&A. Of course, the DSO model, if I decide to do that, I'd have to bring everything to indicated at Blueberry, so we would figure out a way how to finance that, but I mean, we're not sweating on that side of it. Yeah.
Well, you're in the story hoping to make money like the rest of us. If I bought your stock today, when can I hope to double my money?
We're drilling all the time. We're generating news. We're always looking at new projects. I think we're well overdue a re-rating, and I can say that for lots of junior companies. 2025 is going to be a good year for many small companies.
I'm not disappointed that you cannot give me the exact date on which the stock is going to double. That is to be expected. But what about the catalyst? What is it that you're going to do that you think is actually going to result in a stock price moving? Because we've seen that a lot, right? Companies put out good news releases or what they consider to be good news. Stock doesn't move or even moves down. So what can you do to actually get the stock price going?
Sure, and that's a heartbreaking thing for a CEO when you put out a good news release and no one cares. So we've got good flow of drilling results. We're looking to do an updated resource on the Sheridan project and potentially a PEA and sort of talking about the economics. Also looking at some deeper exploration which really can unlock the project. Sheridan's only had sort of detailed exploration above 200 metres. There's incredible potential at depth. In a VHMS system, they can go to kilometres depth. And so deep exploration is really the unlocking of the real value in the project.
What's the timeline for that? When do you want to get that going?
So during the coming year.
Okay. Do you have money to do that, or are you going to have to be raising?
We'll look at all alternatives of how to get money in the bank and through raising partnerships and some other ideas. But we've got a strategy towards that. So at the moment, we've got about $1.5 million.
How far does that get you from a G&A perspective?
A very long time. We work through shared offices and so we minimise our costs. That would get us well into 2028 if it had to.
But would you be looking for an asset level deal at this stage or an equity level deal, again, given where the valuations on these juniors are?
We would rather do a deal that fully values the project, and so is it a back-ended deal that would release something on expansion of the project. So let's say, project level deal would be a better way to unlock that.
Listen, I think we're sort of the big opportunity that I see right now is this precious metal cycle. I think we're about 6 months into it. Historically, it usually takes about a year for the capital to come down cap. We've seen the big guys like the Agnicos, one of the best companies in the world, go from $65 to $140. It's come down cap to the intermediates. The big explorer codes like the Collective Mining with its wonderful discovery down in Colombia, and I think we're just starting to see that move down cap. Speaking to the people in the industry that I know, we're starting to see those flows of capital. That's the most important thing. I think that's going to drive a re-rating, and I think increased M&A, which we're going to see more of in the next little while, is going to see it. In terms of doubling your money or increase, I think there's a few things. One, the flow of capital is going to be a huge factor. Two, with this spin out, shareholders of White Gold, you're going to get shares of a new company, this critical metal company. I think there is an unlock of value that on its own could provide a double. And as we get drilling here in the next coming months, I think it's going to get very exciting point in time. And as the market understands and hopefully starts to look for these good assets in good places, that's going to come to companies like the White Gold. So,
what is a specific catalyst, or what is something specifically that you can do as a company that would actually make your stock price go up?
I think corporately, one is this spin-out. I think that's going to unlock a lot of value. The double-edged sword of owning, such a huge portfolio, you're not getting value for the sum of the parts. Now that they're ready to be drilled, I think this is the appropriate time. So unlocking it that way, we have corporate interest in our flagship deposit. That could be another catalyst in the near term. And getting these drills turning, drilling exciting new targets that we have, I think is the third leg on the stool that can drive some excitement in the near term. And now we're full board, just telling the word, pounding the pavement. From a risk-reward perspective, I personally, in my 20-year career, have never seen a better setup than this for White Gold and other companies with sort of similar attributes.
You said you've got enough money to make that happen. So does that mean that you're not going to go back to the market in 2025?
Right now, we have no plans. Our program for this year is fully funded. We'll see what happens. Maybe we have a great discovery hole. The stock was crazy. Who knows? But right now, we are fully funded for 2025.
But if I bought your stock today, how long is it going to take for me to double my money?
That's a good question. Like everyone, I could say anything, or any time. I'd be cautious with it. We are a developer and as a junior, so before the news gets to the market, as you know, it takes some time. Some of our best project, and I'm thinking of Clinton and the Township, or our Acadian GV in New Brunswick, will definitely have an impact over the next year or so as good news starts to hit the market. We haven't done marketing in the past 2 years. This is our first president at PDAC in 4 years. So give us a little time, maybe 12 months, 18 months, and you should see a pretty good return on your investment.
Let's talk about specific catalysts then in that case. What is it that you can do with one of these projects that would actually move your share price?
So one of our most important projects at the moment is a GV we have with Lobo Gold Resource of Vancouver. It's the Acadian GV in New Brunswick. That one is a catalyst to move the share up, as it is a greenfield project, has seen basically no exploration in the last 40 years. We acquired the ground through staking, and we are just at the start of the exploration project. We did all the good thing, and we're getting really good answer from both all the geophysics airborne we've done, all the soil geochem we've done, and the summer of 2025 is going to be a major step forward and milestone as we'll go to see what's in the bedrock with either trenching or drilling. And all of that should happen between Q3 and Q4 of 2025.
And you said at the beginning that you have money to make that happen. Does that mean you're not going to be raising any capital between now and Q3?
we don't believe we'll need to raise any capital. As I said, we have close to 20 million in cash and cash equivalent. So our objective is not to dilute our stock and our shareholder. If we do move forward with more project, maybe some of our GV partner will have to contribute to keep their share of the project.
I thought dilution was the solution.
No, it isn't.
Well, you're talking about JVs, and are you looking for new JV opportunities right now as well?
That's a tricky question. In a sense, we have a major GV going on with Lobo Gold, and some of our project will definitely try to find GV partner to help us develop them.
And thank you to everyone for listening and watching. This was an interesting conversation. Any and all questions for future interviews are, of course, welcome. Please post them in the comments. But I am still going to kind of repeat the warning that I said at the beginning, that everything combined with the warning that I gave you at the beginning is to say that you should treat this program as biased entertainment instead of unbiased journalism, because there will always be some type of bias in what everyone tells you online. They may own shares of the company, they may be a director, they may have been paid by the company, and so on and so forth. Now, this entertainment program specifically is intended only for experienced junior mining speculators, because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector, and the performance of individual companies typically depends on many different things, including geopolitics, macroeconomics, commodity prices, and many other moving particles that are typically outside of anybody's control, and no one can really foresee them, because unfortunately, and believe me, I have tried, and I might even keep trying, though I doubt I'll ever be successful. I just don't possess any superior knowledge about the potential direction of any stock or commodity price. And at least to my understanding, nobody out there does. So you should not rely on this program for directional advice or advice of any sorts, as this was a conversation that was general and impersonal in nature between a couple of individuals, none of whom are your licensed financial advisor, and none of whom can see the future. So no guarantees can be made about future events, and past performance is not a guarantee of future results. So please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.com, where you'll find the official filings of the companies that might have been discussed in here today. And if you don't do that, you're highly likely to lose your money. There's a couple of documents that are absolutely obligatory reading for people interested in the space. And that is, of course, the MD&A, which is the Management Discussion and Analysis. And it's an official document that the company publishes on setterplus.ca. You want to look at the financial statements of any company and understand how and why and where they spend money. And you also want to look at the Management Information Circular, which is going to tell you how much money each insider of a company earns in total compensation, bonuses, and everything, and all the other incentives that they might have. It's also going to show you if there are any change of control fees and whatnot. It's a very important document. And then, of course, this is a technically focused business. So you also want to read the NI 43-101 technical disclosure. And again, if you don't understand it, consult with someone who does understand these things. Because if you don't do that, you are highly likely to lose your money. So, yes, thank you so much for listening to this, and I'll leave you with one of my favorite Charlie Munger quotes, which was, if you don't understand it, don't do it.